Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, October 6, 2017. So first of all, I want to say that the elite membership interest list is forming. Sign up today, and actually if you sign up right now, you can get elite for free, so long as you remain a subscriber. I'm hoping to go live soon. I was hoping to go live October 10th, but it does not look like it's happening. But once again, if you sign up right now, you get it for free, so you can't go wrong. Once the live Elite goes live, it will be around 40 bucks. My current basic membership is only $24.95, so you're basically getting half off if you sign up right now. Stocks break out to fresh record highs. We'll examine if this is a buying climax. Risk on posture is pretty much evident as financial, industrials, and biotechs lead, but staples and utilities lag. Junk bonds are still confirming bullish posture, and we'll look at TLT as well. We'll look at more detail on the Forex universe. British pound and euro, I think, are poised for a rally. Hoping this will imply gold will also rally because I actually have GDX open. I recently shorted oil. Possibly we might be headed lower for oil into the mid to lower 40s. In that case, my short would be quite productive. We'll also look at XLE, natural gases versus UNG. We'll see if it makes any sense to trade it. And copper is holding at a logical level and is rallying. Alright, let's look at stocks. S&P 500 ETF SPY on a daily time frame. Hit the like button, please. This is sort of important to keep this channel going. So first of all, these are fresh all-time highs. Unequivocally bullish posture. What does that mean, unequivocally bullish posture? That just means that I'm not looking to short. That's all. If I had, the opposite, for example, this would be 52-week lows, then I would be looking to short, most likely. But in this case, I don't see any major issues with this chart, mostly because we have the advanced decline lines hitting fresh highs, the actual indexes hitting fresh highs. I think the participation is relatively broad. The only thing that I can say about this chart that is negative is that it is overbought. But overbought in a bullish security is normal, and this instrument is bullish. S&P 500 is bullish, stocks are bullish in general. So, sorry, what was that? So in general, again, I would not look to short. This candle here on Thursday looks somewhat like a buying climax, but the volume is relatively low, so I cannot say for sure that it is indeed a buying climax. Here, for example, in mid-August, you can see large volume spikes right there in mid-August. This turned out to be a selling climax, and then afterwards we saw a rally. It could be that this is a buying climax, and maybe we'll trade sideways to slightly down from here. But once again, I don't see any reason to sell or short this chart. This is S&P 500 on a weekly time frame, and here we could see a triangle consolidation that I pointed out. And if you are not sure if this something is a triangle consolidation and you just really want to find out, the surefire way to see if something is a triangle consolidation is look for inside days or inside weeks. So in other words, for example, this week's candle, this is a candle from, excuse me, it's a little slow. Computer is a little slow right now. From 1st of September was within the range from August, previous week, and you can see a clear triangle consolidation with a clear breakout with a close above the previous highs. So this is a triangle consolidation with a breakout, and you can see a whole bunch of them here actually. So in general, again, sorry, this looks like a chart is not loading too well, but in general, again, I would not short, oh here it is, S&P 500. So this is in reference to candlestick from August 28th and from the 1st of September. QQQ, Nasdaq 100 ETF, obviously a bullish chart again, fresh all-time highs. It was underperforming slightly, but I would not short this chart once again. Here's QQQ on a weekly time frame. If the chart loads, sometimes we've been having a lot of trouble here. Oh, there it is. So QQQ on a weekly time frame, it was a little bit underperforming, but once again, it got triangle consolidation. Took a little while to break out, but looks like it's breaking out. So once again, I would not short this chart because, you know, various chart patterns or various candlestick patterns, bearish candlestick patterns in a bullish instrument, and this is a bullish instrument, usually do not work out. You need, if you're really hell-bent on shorting, then look for the opposite. Look for multi-year or 52-week lows, and then you know, see if you could buy or rather short on rebound. So for example, here is Kroger. If you're really interested in shorting, you could, well, if the chart cooperates, I could try and show it to you. Here it is. IWM. So here's Kroger on the weekly time frame, and you can see these are multi-year lows or 52-week lows. So basically, what I would be looking for, I would be looking to short it on a rebound, if you're so inclined. In general, during the bull markets, what we have right now, such as what we have right now, probably makes more sense to keep buying versus looking for a shorting opportunities. Let's move on to small caps. Here's IWM on a daily time frame. Just an amazing move from relatively oversold levels to fresh all-time highs. So can't really say much about this chart. The advanced decline lines are confirming all-time highs, so there's no divergence. Longer term, IWM kind of wild today with the charts. Longer term IWM, I wanted to point out a divergence. Here is a bearish divergence between RSI. Notice that RSI became overbought in December 2016 here, and again in January of 2000 or late December 2016 and late November. And then notice that the index itself was grinding higher, while the RSI, noticed it was making lower highs. What does this mean? It means absolutely nothing. Ignore it. I would avoid divergences, especially momentum divergences, like the plague. You know, true divergences take a while. Maybe one day I'll, you know, show again what I mean. But true divergences need to happen on a major index, for example, S&P 500. IWM is a relatively small part of the market. So those divergences I don't really worry too much about. Here again we have a big overbought condition. Now we're at 80 on RSI. Does it mean we're going to collapse? Absolutely not. Notice that we became overbought here in last November, December, and simply continued higher. So overbought in a bullish instrument just shows that it is indeed a strong instrument. Here's the Dow Jones Industrial Average on a daily time frame. Again, once again, all-time highs. Yes, it's overbought. Yes, advanced decline lines are confirming the bullish posture. Overbought does not mean ready to drop. Overbought just means that there is a lot of buying pressure to push the prices higher. Here's XLF, same thing. Financials, again, yes, it's overbought, but it's at all-time highs for a reason, because it's very strong. And it's currently leading. So XLF is pretty much as, well, XLF and XLY, they're both very economically sensitive. So we're basically at all-time highs for XLY, and this is as economically sensitive as it gets, and so is financials, also very economically sensitive, and they're at fresh all-time highs. So overall economy is doing, I think, very well, and I think this is reflective in the stock market. So we're seeing a risk-on posture. In other words, offensive sectors, XLF, XLY, XLI, are leading, while defensive sectors like XLP is lagging, and XLU is also lagging. So both of these, XLP and XLU, they are not bearish. They are simply underperforming. And I think they're currently underperforming because the money, the speculative money, is rotating into offensive sectors, such as, for example, industrials. Here's XBI, Biotech, one of my positions. I opened August 22nd here myself, and looks like we got two targets, and we're moving towards 52-week highs again. So I'm actually trailing this position still. I did take some money off the table, but I'm trailing the rest of the position. So overall, this is a successful trade, and we trade at MasterChartsTrading.com. We traded quite. We trade XBI as well. So overall, again, I think that market is very much bullish, and I would look only to buy, only look for buying opportunities if we see a pullback. I would not look to short this current stock market. Right, let's briefly look at bonds. This is JNK, junk bonds on the daily time frame. These are fresh all-time highs with dividends. If you take out the dividends, the chart would look different. And the way to take out dividends is pretty straightforward. If the computer cooperates, it's been kind of goofy tonight. But in any case, all-time highs is confirming a bullish posture for stock markets because of the correlations between the junk bonds and stocks. You can see down below here the correlation coefficient is mostly positive. On a weekly time frame, junk bonds also are confirming fresh highs in the stock market. Still don't see a top-in pattern. When or if we see a top-in pattern, we will worry about it, kind of like here in 2015. But so far I don't see it, so I would keep looking to buy more. In other words, I would be looking to buy equity. I would not be looking to sell or short it yet. Here's TLT on the weekly time frame, and here, or rather, let me go to weekly first. So here's weekly time frame of TLT. Notice that we had significant selling here for the past 4 weeks. Are we done? It's possible. There is decent support here at 121.82. So let's look at that on a daily time frame. Let me see if it's yeah, so it looks like it's a 50-day, rather 200-day moving average around here at 121 or so. So it looks like there is decent support, and we're approaching that support. And I would, again, I'm thinking TLT is bullish, and I would look to be buying it. In fact, I have a position open myself for TLT. Okay, let's look at the Forex universe. Here is US dollar on a daily time frame. So first resistance was cleared here at 93.30 or so. I pointed it out last few videos. We're currently at previous highs at 94.06. Maybe this is already a shooting star candlestick. Here's that same chart basically on a weekly time frame, and here I have my custom indicators, and you can get those MasterCharts Trading. You can get them if you sign up for Elite service or for regular service. Currently you get free Elite indicators. So here notice that here in June of this year, dollar dropped below this yellow line and just continued lower. Now currently we are rebounding and we're around this yellow line again. And the way I use this indicator is that if we made a lower low, we're now going to be shorting it. You know, this is a 52-week low, so we're going to be shorting it at yellow line. Vice versa, if we made a higher high here, for example, in 2016, we're going to go long, this instrument. But looks like we have a reversal on our hand that occurred in June of this year. This is a weekly chart. So again, I would be probably shorting if I was trading US dollar right now, and I don't. I would be shorting it right now. Here's that same chart on a weekly time frame, and we're basically approaching previous highs, and looks like I think we want to roll over here. Two of the major components of the US dollar index are British pound, which I think also has reversed, and I think we're now in an uptrend. And if I was trading British pound, GBP USD, alright, here we go. Computer's cooperating very poorly today. Anyways, here is the breakout for British pound in on the July, in the beginning of July here, or I'm sorry, in beginning of August here. And again, I would be going long British pound somewhere, actually even right now. I would be buying it right now. And here's euro on the daily time frame. Again, I also would be buying it right now. If I was trading it, I don't trade euro, or I don't trade any currencies for that matter. So here's euro on the weekly time frame, and I pointed out this breakout above previous resistance highs. Now we're seeing a normal throwback. We could go lower, but I think this is a normal throwback, and I think upside is more likely for euro, and for that matter for British pound as well. Okay, here's gold on the daily time frame. This is a continuous contract. So we have a breakout here in late August, fresh 52-week highs. Again, once again, this is a normal pullback, so this is a throwback. Now, we did not get stopped, the throwback did not stop at the breakout levels, which was around 1300, and we continued lower. So far, I don't see anything abnormal with this pullback. If anything, me personally, I actually have a position out, GDX out, or rather I have a position in GDX right now. And at MasterCharts Trading, I did send an alert for GLD to go long GLD. So we have currently a somewhat losing position, but this is why you have stops, and you have stops that basically shows how much risk can you tolerate. So stops are important, but too tight of stops could be harmful. So I prefer personally more wider stops. Here's GLD on the daily time frame. Notice this very bullish looking candlestick on Friday. This looks like a good looking hammer candlestick. I think we could rally from here now, especially if dollar cooperates. In other words, drops lower. Here's gold on the weekly time frame, 52-week highs. This is an important piece of the information, is the fact that we have 52-week highs for GLD, for gold, and now again a normal pullback. I think we will find support very soon. On the weekly longer term time frame, I just wanted to show that I think we are in a bull market for gold. I think we started bull market for gold in 2016, somewhere in March of 2016. This is according to my proprietary market breadth index for gold. Notice that there was a breakout here in March of 2016. So from here on, I was treating gold as bullish, and I was looking for buying opportunities. Here's gold miners on a daily time frame, and very bullish looking candle here on Friday. Kind of look like a outside reversal kind of candle. Several positive things about this chart is that we have 50-day going over 200-day. We have some highs that are appearing, although all of a sudden we have new lows appearing. So overall, I think this is I would be treating buying it on the. I would be buying this chart. I would not be shorting this chart. Again, primarily because I think gold is in a bull market, and why go against it? So here's weekly GDX. Maybe this is a bullish engulfing on the weekly time frame. Notice that it's very possible that we see an outside reversal here, and it's a logical place for it to reverse. In other words, after a pullback, we have a bullish engulfing and continuation higher. So hopefully we're going to see a move higher from here. Okay, so let's move on to other commodities. All right, let's continue with various commodities that we trade. Here is West Texas Intermediate oil, light crude oil. This is a weekly time frame, a longer term chart. I still have a bearish bias on oil for various reasons. There are some fundamental reasons, but this chart just doesn't feel like it's a bullish chart because there's a multi-year lows here. Even though there's a 52-week highs, I still feel like we have not really broken out to the upside, so I would continue to short this chart. In fact, I am doing just that. In fact, I opened a short very recently because I felt like we have topped out basically. And notice this really interesting candle. This looks like a classic shooting star candlestick right there on September 28th, right there. What happened? Here we have a failure at R2, so resistance 2. Looks like the price came up just above R2, then we got strong selling came in and then pushed the prices lower. I mean, I'm very hopeful about this trade because notice that on Friday we had a very big red candlestick, and on Thursday we had an attempt by the bulls to run higher. So this appears to be like a market making maneuver to me, and it seems that they have grabbed some of the stops up here at around 51.25 or so, and then moved lower. So this is a very hopeful looking trade for me personally, because I actually have SCO open, short crude oil. So I'm hoping that we're gonna move maybe even as low as 45.50, but hopefully even lower to like retest the June lows. So that would put oil somewhere in the lower 40s, which is not, not impossible. I think it could easily drop that low. Okay, and here's XLE, the energy ETF on the weekly time frame. Notice this big rebound here. Oil also bounced a little bit. XLE bounced pretty strongly, and so far not really rolling over like oil does, but it is stalling at the logical level. And here's what I wanted to show. I wanted to show XLE with my indicators. Notice I did not change the indicators, they're the same at 250. The setting is 250, so 1 year worth of data. Notice that these are 52-week lows here in August 18th of this year, and now a rebound. So what I usually say is we can short around the yellow line, but definitely around the light blue line. This indicator is quite robust. This overlay is quite robust, and you get this indicator if you sign up for elite service at MasterCharts Trading. So do sign up. So XLE is currently at a very logical level. Now, I don't normally short equity during the bull market, which is what we have right now, but this looks so tempting. But I am short oil, so maybe that's good enough already. Okay, let's move on to natural gas. Again, natural gas is really not for the light, for the easygoing people. It's a very volatile, difficult to trade instrument. So if you're a beginner trader, I would just avoid it altogether. It's really difficult to trade because of the choppiness. So this is a weekly time frame, and I'm actually staying out of the market altogether because I thought we're bullish, but now we're just selling. I don't like it, I just don't like this chart basically. So here is a trade idea, and I'm sure you've heard about this. If you have a margin account, here on this chart we have net gas, which is a spot price in black. This is a spot price of natural gas, and UNG, the venerable trading vehicle. Notice that UNG back here was as high as like $500, and notice that it's now at $6.25. Why and how does that happen? There is something called slippage, because UNG is put together using futures contracts and options, I believe, and the way it does not track the actual price of natural gas that well. So one option, if you have a margin account, for example, is to short UNG on any rebound. So let's say that we've rebounded from $1.60 to like $2 here, and you simply shorted it here, and you just have the decay work in your favor. But you have to have a margin account for this. So anyways, we're staying out of the natural gas market for now at MasterCharts Trading. Copper on a weekly time frame, pretty much a straightforward bullish looking chart. Had a breakout here in 2016 and then continued higher. We are trading it on the upside, and we recently closed a very successful trade, and we actually reopened a new one, and you can trade copper with symbol JJC. So it tracks pretty well. Here's copper on the daily time frame using my indicators. Notice that we sort of bottomed around the green line, and now we've moved higher. So basically we look for opportunities in bullish securities. We look for opportunities around green and blue lines. And once again, you can get this indicator for free if you sign up at MasterCharts Trading. And the opposite is also true. You can short around the yellow line if you have a margin account. So we do trade for elite service. We do trade more of some of the more volatile stocks. So here is a good example. For example, DRRX. and I actually myself entered. I have a position that I opened at $1.60. It's currently at like $2, so we're definitely moving in the right direction. So some of my positions are, if you sign up for Elite, I share all my positions obviously with my subscribers, and if I go ahead and buy something, I will absolutely send an alert about this. So do consider signing up at MasterCharts Trading, and eventually Elite will go live. But for now, you can just get it for free. All right, thanks for watching, and have another great trading week. Bye bye. Oh yeah, hit the like button.